stocks our strategists feel are poised to deliver positive returns are featured now in their top stock picks of the week.
Clothing retailers seems to be the theme this time around on Top Stock Picks, and even though we're talking about them on April the 1st, April Fool's Day, they're no joke. Ben Raines and Dave Boren join us with details here. And Dave, we're going to start with you, Lululemon.
Okay, Terry. Yeah, this is a real interesting clothing retailer right now. I'm going to start obviously with the report last week. Just a blowout quarter for them. And that phrase gets overused. Sometimes we say, oh, they beat on the top and the bottom. It's a blowout quarter. This report, they really beat everywhere. And the most important thing, in addition to beating on top and the bottom, is that they were growing same-store sales while they were opening stores. So some retailers have been closing locations lately. Same-store sales look good because they've been closing the underperforming locations. Lulu is the exact opposite. They've been opening new locations. The existing stores that have been around a year are still selling more while the new stores are successful. They're also selling about 30% of their product online now, which of course is a higher margin business. Now, I did a little bit of my own amateur market research on Lululemon this weekend. We happen to have some friends visiting from out of town, and so I was able to ask a group of predominantly women, but ranged from teenagers my daughter's age through a couple generations of adult women about Lululemon, because I wanted to get their thoughts on the brand. And not only were they universally positive about the comfort and quality of the clothes, but I heard one real interesting anecdote, and that's one woman told me that she saw a pair of pants from Lulu online that she wanted to have. It was a cut and a print that she liked. She went to the store to buy them. They were almost sold out. They only had one left, and it wasn't even close to her size. She went home, got on the internet, tried to buy them off Lulu's website, was only able to find one pair there, bought the pants that she wanted at full price, and then got 4 compliments on them the first time she wore them to yoga class. I'm not making that up. I know it sounds like a made-up story. I swear it's true. That's how they're holding margin, right? So when retailers increase their sales, a lot of times it's because of discounts. Customers love to see a discount. They love to see a markdown on the tag. Lulu is still selling their products at full price and with strong demand. They're also expanding outside North America. So previously, most of their sales have been in North America. This past quarter, they've seen 70% growth in Asia, 55% growth in Europe. And that's addition to 30% growth in their online platform. They also raised guidance by a considerable amount, more than 20%. So out of the 14 analysts that we have covering Lululemon, all 14 have raised their estimates in the past 7 days since the last report came out. So the estimates for next year are for something in the order of 3.7 to 3.75 billion in revenue, and for 2020 it looks like over 4 billion in revenue. So Lulu's really hitting on all cylinders here, opening more stores, still holding good margin with brand value, and growth opportunities overseas. One final point before I let you go on this one. Lululemon has predominantly been a brand for women. They are expanding their men's offerings considerably. I think this is a really smart move for them now, specifically because we're seeing that the dress codes are getting relaxed, especially in a lot of workplaces. So we're going to see a lot more opportunities for men to wear these comfortable, functional, good-looking clothes to work, and it's a completely untapped market for Lulu as of right now.
All right, Dave, thanks for that. See, top that, Mr. Ben Raines. He takes his case right to the consumer, gets it right from the horse's mouth.
All right, well, yeah, so I'm doing Ralph Lauren, and this is a company that Lululemon has kind of taken some of the shine from, and this is a company that they're going after the consumers that Lululemon has won over, these younger consumers. Okay. So we're going to talk, the stock opened up at around $130 per share Monday morning. It's a dividend payer with an annualized dividend of $2.50 per share with a yield of 1.9% right now, so a solid dividend payer as well. But the real point of why I like it, the stock is up 26% this year, which is doubling the S&P. It's coming off a way better than expected fiscal third quarter of 2019. And despite this climb, they're still sitting 12% below their 52-week high. So it's really solid momentum play going in at the moment right now. And as I said, it's a brand that has struggled a bit as of late, but it's still a brand that everyone knows. But they're going after these younger consumers, and this is part of their 5-year, you could call it like a restructuring plan from 2018 to 2023 of trying to reach these younger consumers. They upped their marketing spend 18% last quarter to focus on digital expansion, and this really paid off. They saw their digital revenues climb 20% last quarter, and they saw huge growth in Asia, which is a market that they're really trying to penetrate more heavily, as North America, people pretty much know about Ralph Lauren in North America at this point. So they were up 62% in Asia, as I said, with total revenue up in China 19%. So China is another specific area in Asia that they're trying to grow in. So that will be a big part of their business going forward, hopefully. And then if we look at the full year earnings for 2018 or 2019 and 2020, this is where our Zacks estimates are coming up big. So the 17% growth for this full year on the bottom line, and then 8% growth next year. So solid growth on top of big growth for 2018. And then if you look here, we'll see that their estimates for 2019 and 2020 have gone up in a big way recently, which is always a positive sign. And they're also a company that's had a solid history of earnings beats. They have about a 7% average beat over the trailing 4 periods. So they're a really solid company around earnings. And as I mentioned, they're a dividend payer. They're on the rise. They're trying to get after these younger consumers, and it seems like it's working, especially in Asia. Digital comps up huge. Overall revenue on the digital side up big. And it's all part of this 5-year plan that they really have seen working out so well, and it's still in the early stages, I would say. And then they're trading at a pretty solid earnings multiple, about 18.4 times forward earnings, which is below their 1-year high of 22.4 and well below the industry at 20.4. So really solid company at the moment, I would say.
All right, and that stock price you quoted was for Monday morning, April 1st.
April 1st, this morning, yep.
As we're talking about it.
Yeah.
Do you own either of these two stocks?
I do not, even though I've been keeping my eye on Lululemon and now Ralph Lauren as well.
All right, Dave, how about you?
No, I don't own either, Terry.
All right, thank you both for the info, and don't forget there's more information on a lot more stocks. These two and many more on our website, Zacks.com. Get over to the homepage, start checking it out from there. With Ben and Dave, I'm Terry Ruffalo.